Shantanu Roy joins us, Chairman Managing Director of BEML, to walk us through what transpired for the quarter gone by and what we should be looking at in terms of specifics for the coming quarter. Mr. Roy, good morning. Thank you for joining us. It's been a good all-round quarter. Revenue is up, PAT is up, EBITDA margins have also expanded. Is this largely because of any cyclicality which was at play, or this is the new normal now for BEML?
I believe this should be the new normal for BEML. We have definitely taken some measures, and the results will start showing.
Measures, can you be specific about them?
Yeah, you see, year on year, if we look at the quarter 2 22 versus quarter 2 23, our sales is up by 13%. And because of that, our profit is also up significantly. The EBITDA margin has gone up. And the major reason for this, for the EBITDA margin or the profit to be up is, as I said, one is the sales. Number two is the employee cost, which has gone down considerably compared to the first quarter, from 36% to 29%. And year on year, it is also 2% down as compared to last year. Our inventory has gone down. Our material consumption has gone down by 6%. So because of all of this, we have been able to have a tremendous growth in the PBT. And as our sales revenue keeps on growing, we hope in the third quarter it surpasses last year's Q3 by at least 15 to 20%. Then all these numbers will be even better.
Right. Mr. Roy, great to have you in ET now, and here's wishing you a very happy and prosperous Diwali from all of us.
Thank you. Happy Diwali to all of you.
Thank you. Just picking up on the point that you were making, Mr. Roy, you were targeting a revenue of 7,000 crores in FY26, from what I understand. Is that on target, you think, or you'll be able to beat that figure?
As of now, I am quite optimistic about 7,000 crore in FY26. But if all goes well, yes, we may beat that figure as well. It all depends on how we perform this year. This year, we are trying to have an improvement of at least 20% in our top line. And if that happens, and then our strategies for 24-25, as per that, again, if we are able to achieve a 20% growth, then of course, we are well on our way to improve upon the 7,000 crore.
Okay, Mr. Roy, hi there, morning. Let's also discuss your margins. I know you touched upon that briefly initially, talking about strategies that the company is adopting, but you also had the easing raw material prices and the steady revenue that aided your operational performance. Do you think that from this 6.7% we can see your margins scale up? Do you have any targets in mind?
Yeah, definitely. If you talk about the EBITDA, the last year's EBITDA was almost touching double digits. And definitely, I see a growth of around 200 basis points in the EBITDA itself when we end the year. And, the prices easing up will have a even greater impact in the third quarter or in the fourth quarter, because that impact has not yet set in for us. We had already ordered the quantities, or already ordered the material, where the price was already on the higher side. Even with that, we could manage a reduction in material consumption by around 6%. So that is mainly because of the initiatives that we have taken in rationalizing the design, as well as the product mix that we had for the last quarter.
Okay, fair enough. And what about your outlook when it comes to the export potential? Because you were focusing on Africa, Middle East, Russia, etc. With respect to mining and construction in particular, what kind of opportunities are you foreseeing? How much will your overall export contribution grow to?
This year, my overall export contribution should be up by at least 50% in absolute terms. And as a percentage to the overall revenue, we should be at around 3% as far as the physical exports is concerned. If we talk about the deemed exports as well, it should be more than 20% of the total revenue. And exports, you see, apart from Africa, we have a lot of opportunities which we are working on in the erstwhile CIS countries. And I can see at least 500 crore of order book for the next financial year, which we will have for the export of mining products.
Okay. What about the outlook in terms of the capex plans? It was about 200 crores that was planned for FY24. What's the status here? How are things progressing?
Things are progressing pretty well. In fact, we have increased the capex by further 150 crores. This year capex outlay is 350 crores, and if all goes well, next year we will further try to increase it by at least 40%. And this is basically, for preparing ourselves for the future, as well as consolidating our present capabilities. So both we are planning, and I believe with this capex for the next 5 to 6 years, we'll be pretty comfortable.
Okay, and what about your overall order book? What kind of an order boost did the Vande Bharat train order provide for you? Are there any more significant orders in the pipeline? What's your targeted order book?
You see, presently my order book is around 13,000 crores as on date. This year we have booked around 5,700 crores of orders. This 13,000 crores of orders, it consists of around 58%, 55% from the rail metro, around 35% in defense, and around 10% in mining construction. In the remaining period, I'm hoping that we'll get around 550 crores of orders from the defense segment. From the rail and metro, we are hopeful that we'll get at least 3 to 4,000 crores of orders. And mining, you see, mining is uh, a very fast-moving product. Generally, within a span of 6 months, we are able to execute the order. The turnaround time is pretty low. So this year, we are looking at booking orders for at least another 1,600 to 1,700 crores. So the year-end order book should be around 17,000 crores. I still believe, if the railway projects especially, they get concluded.
All right. Good to have you on board. Thank you for taking time out and giving us an outlook on your financial parameters as well as growth prospects. So that's a very